Well, for more insight on the unfolding situation in Japan, with us is Bob McKee, Chief Economist at Independent Strategy. Bob, thank you so much for coming in. We still don't really know, because of the devastation, because of the aftershocks, the extent of the damage.
No, we know that the industrial capacity that in the devastated areas is probably about 7% of Japan's total industry. So that's an indication that of the amount that could be cut off in industry. Over the overall economy, I suspect something like 4 to 5% will be annualized. GDP will be lost, at least for about a few months. Obviously, that could recover. I think you're talking about a recovery like an S on its side. It goes down, comes back up again, hopefully. And so this loss in that short period will eventually be recovered, although I think this time it's worse, that the infrastructure and the transport is so much more damaged than in Kobe, and the leisure services and the services sector in general will take more time to recover. So Japan could lose 1 or 2% of GDP this year.
And of course, as the government is trying to rebuild, it also means that, well, the fiscal position is going to deteriorate.
Indeed. We already know that Japan's public debt to GDP ratio is going to be 210% as at the end of this month, which is double what it is in the rest of the OECD. The budget deficit is 8% of GDP. We now know that's going to be a lot larger, given that the government is going to introduce a supplementary budget. And so that debt is going to rise. That's going to put a lot of pressure upon the sovereign debt in Japan and the feelings that markets will have towards Japanese bonds over the next year.
Are we going to have a credit downgrade?
I think we held off for a while because I think agencies will want to see whether the economy makes some recovery and whether this is just a temporary support for the economy. But we're already in the process of downgrading Japanese debt, and I think it's going to continue. This is just bringing forward, perhaps, forcing the government, probably from a year from now, to do something much more seriously about their debt levels, which clearly they're not going to do for the moment.
Now, but if we look at this, you know, we've been talking a lot about the Japanese economy, and of course these devastating pictures show exactly how vulnerable the country will be, but they also hold a lot of reserves, so it will have an impact for the rest of the world and especially the US.
Well, we've already seen what's happened is there's been a flow of funds back into Japan, both for Japanese citizens bringing things into cash and bringing them back, repatriating in order to take a precautionary measure and to help the economy. Japanese authorities have 11% of GDP in FX reserves. They also have huge bond holdings in the US and in Europe. If things get really bad, if we have a much more serious situation than we do at the moment, we could see a big flow back, and that could damage the rest of the world. But at the moment, that's not the case, but it is in reserve. And so if we have a serious, say, nuclear meltdown, which changes the picture, then we could also see quite a fast movement of reserves and flows back into Japan.
Now, the governor of the Bank of Japan, of course, was saying that he was doing everything that's possible, but also is looking at every measure available to him. Does that mean that it's more likely now that they will weaken the yen?
Well, the pumping of liquidity that we've talked about, that's been announced today, is huge, and that will obviously flood the markets with more yen for emergency liquidity. The authorities are going to, BOJ is going to buy more government securities and other securities. That means more yen into the economy. I think so. On the one hand, you've got repatriation and moving towards cash, which keeps the yen strong. On the other hand, the authorities are pumping in more yen. That will keep it weak. So I suspect over a period of time, we've probably seen the strength of the yen. I don't think, unless we have a further disastrous news, the yen is going to get any stronger from this and will gradually weaken over the next year.
And then, of course, there's always possible just direct intervention from the Bank of Japan, which was a possibility, but which hasn't happened yet.
We were expecting perhaps they might do that because it continues to strengthen against the interests, I think, of the growth in Japanese economy. And if it got towards 80 yen to the US dollar, I think that was the intervention point. We're a little bit short of that, 82 today. I don't think we're going to go back to 80. We might do, but that would be the point in which the Japanese government and the authorities would look to actual FX intervention.
Bob, thank you so much. Bob McKee there.